Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the founder, CEO, and president of the Oxen Group. And the Oxen Group Nightly is a way for us to recap the market, help you understand our philosophy on investing, some of our positions, and also give you our forecast about what's going to be happening in the coming days in the market. And today we're going to be talking about our Thursday market recap. We'll be also looking at our position that we got into today in Macy's and why we got into that. We'll be looking at our quick pick today in Williams, WMB. We'll also be talking about our exits that we took on DANG, DPS, and GFIG, as well as some of our other current positions. We'll be talking about our long-term ratings update on Paychex. PAYX is the ticker, and we'll also be looking at our forecast for tomorrow. So stocks opened lower today, but moved up higher throughout the day, and ended up being a really great day in the market as we got some really bullish news from the Philly Fed manufacturing report, as that came out way higher than expected. The market opened lower after jobless claims added quite a bit from the previous week, coming in at 425K. And reading into it a little bit more, though, you could see that a lot of the claims were filed because, or there were a lot more claims because of bad weather, and it really wasn't. It seemed to be bad, but the incremental gain is really a lot of it was due to bad weather, according to the Department of Labor. Now, obviously, they're going to modify their statements to be fitting with the agenda of the government, but at the same time, they are sticking that a lot of people were not able to go to the jobs that they needed for their unemployment because of the bad weather, so they had claims instead. Earnings were limited on the day, didn't have a big impact on the market. So let's talk a little bit more about that Philly Fed manufacturing report that we had out today. It's basically an index of the manufacturing activity in the states and cities surrounding Philadelphia that use the Federal Reserve Bank of Philadelphia. And the manufacturing report actually doubled from the time frame of January to the time frame of February that they were monitoring, and it moved from 19 to 36. Now the index is still in the negative. You want an above 50 means positive. Manufacturers and the manufacturing that's going on in that area is positive, and the index is positive if it's above 50. But the move from 19 to 36 is a great move, and the consensus estimate was for 21. So that beat was gigantic and literally reversed the market, which we'll show in just a second here. As you can see right here, at the beginning of the day, we open up lower, and Philly Fed manufacturing report comes out right here, and you can see that right away the market just starts to move up, move up, move up, broke out from where we were yesterday and continue higher the rest of the day. Now, we've been talking a lot about the 12,300 level as a possible resistance line, and we can see that we broke out above that and then tried to hit the 320 level and couldn't sustain gains there. And the question now is, we broke that level, so can we continue to sustain those gains above that level? And it will be interesting to see tomorrow what happens in the market, given some of the things that are going to be going on in the market, which we'll talk about a little bit later. So today we got into a position in Macy's. We're really bullish on this company because of some of the technical setup that it has, combined with the fundamentals that it has, based on the fact that the company is going to be reporting earnings on Tuesday morning, and they're expected to do quite exceptionally better than they have been in the past. The company, we were hoping, was going to get some good news out of Nordstrom's and after hours today from one of their main competitors to help them tomorrow. And Nordstrom's earnings were good. They beat expectations on EPS and revenue, and they guided higher, but the guidance was a little bit cautious, a little more cautious than Wall Street had expected. And they also announced that they were going to be buying a new company. And typically, when a large corporation buys a much smaller firm, it tends to not reflect well on the company, simply from the standpoint of, I've actually never really understood why that is. And actually, this is a great purchase for Nordstrom's. They bought Hot Click, which is a company that is basically helps integrate online sales, which this company is really moving towards. And so some of the comments were sort of like, a restructuring process is going on at Nordstrom's right now, and they're moving in the direction of wanting to have a much bigger presence on the online sales side of things. And so they said that they're going to be dedicating a lot of cash flow there in the next couple quarters, and so the market was sort of not didn't like it tremendously, but the stock was only down about 2.5%. And after it's made a 20% gain over the last couple of months, I mean, giving up some of those gains was probably going to happen unless they just completely killed it. Now Macy's, what we got into, has set up really nicely for what we think is going to be a breakout tomorrow into earnings, and we're going to be able to get a nice quick gain from this one tomorrow. As we see the stock, it's right here. The fast stochastics have crossed, and so this means that buyers are getting into this. Now, while the fast stochastics are already pretty high, RSI is not very high, and so this is sort of the fast stochastics level here. Really what we care about is that the K and the D lines are separating, growing apart, which shows buyers are entering, not exiting. And so also we have this this thinner moving average, 50-day moving average right here, that's at 24.18. Now the stock closed today at 24.06, and it could not really break that level. There's a really big resistance line right there. But if we can get enough gains in the morning tomorrow to break out of 24.18, so as soon as that stock hits 24.18, 24.19, we think that this stock can go to 24.50 to 24.75 right away tomorrow without much resistance going on there. With the earnings coming and the expectation that they're going to be pretty good, Nordstrom's beating, we hope will be a positive for Macy's, and that some of the other company specific news that Nordstrom is taking on won't affect Macy's. We hope that people will overlook that. But the good thing about it is that our downside risk is pretty limited. They have a really nice support line here at 23.70, as we can see. That's kind of been established over the last week or so. With that exponential moving average there. So even if this stock does not have a great day tomorrow, we might we might take a little bit of a loss, but it will be at most like a 1% loss, and it won't be such a big deal. And it was definitely worth the risk, because that sort of upside to 24.75, if it can break out here, is definitely worth it. Let's also talk a little bit. We got into today, this morning, Williams Companies Incorporated. We made a quick 2% scalp on this morning, and what we liked about Williams and Company was that they beat earnings, or yes, they beat earnings, exceptionally. They also announced that they're going to be offering a dividend now, as well as splitting apart their company. They're a natural gas company, and they have an exploration side and a production side, and they're going to split those two apart so that they can focus more on each one's individual needs, and it's actually more valuable for the company. And what we've been seeing lately in the market with a trend is that the market is really buying up a lot of companies that have really strong earnings, even if those companies are very overvalued. The reason is that year over year differences in how they've been doing comparatively has been a big driver. We saw Dell, Panera, a number of other companies, Abercrombie & Fitch, all really have these strong movements off of their day after reporting exceptional earnings that were then bought up in pre-market and opened much higher. And that's not something that we expect. We expect if the stock's going to break out of its Bollinger Band so much, you're going to see kind of a flat line. There's not a lot of upside for these, but these stocks have moved up 4 or 5% intraday after opening up 10 to 15 to 20% higher. So what was going on? So we looked into it a little bit more, and we noticed that a lot of these companies were having these exceptional beats on their EPS, and a year ago they were in the negative. And so we've been kind of following that trend, and we saw Williams Company this morning beat EPS by an exceptional margin. And in the last 4 quarters prior to this quarter, they had missed expectations, and they guided well. Everything looked good. There was a lot of bullish news. And so we pulled the trigger right at the open, got in at 30.10 10, and we were able to get out of the stock at 30.70 literally 5 to 6 minutes later. Got a 2% gain really quick, and it was a perfect trade. And we will try to re-establish that sort of philosophy into a couple of more trades moving forward with what we have left of earnings season. And that will be something that we can look at in the next quarter to see if that sort of pattern has continued itself into the next quarter. Also today we had 3 other exits all in the green. We exited our position in Dang Dang e-commerce, the Chinese Amazon, for a 2% gain after the stock rallied in the morning. We also exited Dr. Pepper Snapple for close to a 3% gain on our average gain there after the stock did well on earnings and opened much higher. We only had 20% left of the position this morning, but we were able to take a very solid gain on that last 20% and pull our gain up from 2% to almost 3% with just that last 20%. And then we also exited a short sale we had in GFI Group for 1.3% gain. The market has been looking pretty strong, and we had that gain there, and it seemed like it had hit a wall, and its downward momentum is kind of stuck at 534, so we pulled the trigger on covering there a little bit before our target. Our other current positions, the only other holding we have besides Macy's right now is Infinera, and we were really happy to see that stock was up, as high as 7% today, and overall made a 5% gain on the day, and is almost halfway back to 9 after, over halfway back to 9 after suffering a couple days of losses. And so we're hoping that stock can move back to 9, and we can break even on that stock once it gets back over 9. And finally, we also reiterated a hold rating on our long-term rating side of our company on Paychex, and we have a $37 price target on Paychex, and we really like this company a lot. We just think that the residuals on Paychex are in such a way that the growth of this stock is limited, even if there is a really strong return to jobs. This is a very solid company, no debt, cleanest balance sheet, great cash flow, everything is perfect, huge economic moat, and this is a great company. The problem is that the residuals on this company are so limited that even their really awesome growth that they can have on a 5-year outlook, when you present value all that cash flow that they have coming in, you have to take such a low residual growth rate, because there is just not a lot of residual growth in a service industry, in the services industry, especially on the paycheck side of things. I mean, it's not like, companies are suddenly going to need, a million more paychecks. There's just no way for paychecks to really, once they have a business established, yeah, it's great, but there's only so many businesses, and it's not like a tech company where they continually can innovate. Paychecks are paychecks, and we're not going to really see paychecks. I mean, they might go digital, but that's really not going to change much for paychecks, the company. So that's kind of where we're at with them. We really like the company, and if they ever have a pullback at all, we would love to pick up some stock there. They have a great dividend as well. So tomorrow, so we get that 12,300 level. We're right above that level on the Dow, and I think if we can open above it and we could sustain, and we could get a little bit of good news tomorrow, we could really have another big day in the market on limited news. I just think that level, we broke through it pretty easily today, and once we broke through that, there was some good buying, and I can't imagine us pulling back right now. I mean, there's so many good companies reporting so many good earnings. There's a lot of mergers going on. There's a lot of buyouts going on. I mean, there's just money. It just, people are ready for this economy to just rev its engine, just come back fully. And there's so many exciting things going on right now. One of the great things for us was we had great earnings from SunPower. This is one of our long-term positions on our long-term rating portfolio, and SPWRA is the ticker on that one, and the company's up over 8% after us. But this is not only is this good for us, it's also good for the entire solar sector and probably the entire energy sector, as this is really the very first solar company to go. So we'll be looking at some solar options probably in the morning for some equity positions. And so the problem though with tomorrow is there's really no other major earnings, and they were limited in after hours, and there's no economic data tomorrow. So I think we're really going to have a kind of show me what you got type of day tomorrow. I think some of the sectors that have been strong throughout this past week and a half will continue to up. I think some of the sectors that have been weak will have some struggles. I think stocks that have been doing well will continue up. on buying, and I think the stocks that have been struggling will continue to struggle. Probably won't be a huge day, not like a 100-point day, but I do think we will see some good movement upward throughout the day. The other last thing is you have options expiring tomorrow, and that can sometimes have a positive or a negative impact on things. Some guys want to get those last contracts out, and sometimes that can be good for the market. Sometimes it can be bad. So we'll just see how that plays out as well.